Friends, I, Captain Vivek Jain, welcome you all to my 10th episode. In our earlier discussion, I did describe the various elements of a balance sheet. Friends, please do visit websites for balance sheets easily available online of many good companies and study the data of past few years given in successive columns, closely understanding the figures of the various features, comparing them between companies, and having a clear perspective in your mind. In case of any queries, please do mention in your feedback comments in the space provided, and I shall try and reply to all of them. Friends, today we shall describe the various salient features of a company's profit and loss account. A profit and loss report, also known as an income statement, shows the profitability of your business over a specific period. It can cover any period of time, but is most commonly published quarterly and annually. Friends, I show you my presentation now. The purpose of profit and loss report. A profit and loss report is a useful tool for monitoring the business activity. For business owners and equity shareholders, it highlights whether the business is succeeding or struggling. Investors may use this profit and loss report to gauge the financial health of the company and to see what kind of return they are getting on an existing investment. Now, the question comes, what is there in a profit and loss report? Well, in general, a profit and loss report, also known as income and expenditure, it will be split into two sections. First is revenue and the second is expense. It's as simple as that. Revenue, details of all income from the primary business activities, that is the sale of the product that the company manufactures probably, or maybe the services. Any revenue which also accrues from secondary activities will be mentioned over here. For example, interest on bank deposits, dividend or any inflow from investments made, and apart from these two also if there is any other financial gain. All these three aspects will be mentioned in the revenue column. In the expense column, details of all expenditure made for the primary activity of the company, the material purchased or the labor cost will be mentioned. Any other secondary expenditure which may not be connected with the main primary activity, or any other loss or any other expense which has been incurred during the period. Now let me also tell you the revenue details. The most important part of the revenue section is, as I said, primary activity, which shows the total sales of the company. Secondary revenue and other income will also be mentioned there if it is there, but it cannot be predicted, it cannot be consistent, and it cannot be regular. So to know the business growth, an investor should normally focus the study on the primary sales revenue. You have to note how much sales have risen or fallen since the previous profit and loss report. Study the itemized sales figure of individual products in case the company has got multi-products to understand which ones are performing well and which ones probably need attention. Observe if the revenue is increasing between the profit and loss reports, or is it not increasing? The graph is going up or is it going down? A pattern of falling revenue shows a business is in trouble. Now let's come and see the expenses in detail. The two main sets of figures in the expenses section of a profit and loss report are cost of goods sold. Number one, cost of goods sold will definitely include the cost of the labor or any raw materials purchased. Second is operating expenses, any other costs which are not directly linked to the production of goods or services. It can be administrative expenses, power, fuel, or so many other expenses which also are necessary. Note if steps are being taken to reduce the costs wherever possible. This you can also get if you study the successive profit and loss reports of the company. For rising material costs, such steps may be to find a different supplier or to find more efficient ways. But at the same time, you have to bear in mind that inflation is likely to cause the costs to increase. So some increase is inevitable. Now let us talk about how is profit calculated? How do you reckon profit? From the profit and loss report, there are a number of important figures that may indicate the business's profitability. The first one, and in a very broad manner, it is known as gross profit. Gross profit is revenue subtracted by cost of goods sold. That is the difference between the total sales of the company and the cost of producing the goods. It's an indicator of overall production efficiency. And it is also a key figure for the company to set prices and sales targets. They can increase the price to improve the gross profit. They can improve the volume of the sales or the target of the sales so that the gross profit improves. Gross profit margin for the purpose of calculation is very simple. Gross profit divided by revenue and multiplied by 100. It gives the margin in percentage. For example, if one says that my gross profit margin is working out at 20%, it means a gross profit of 20 paise for every 1 rupee of revenue generated. Second is operating profit, which comes after gross profit, because from gross profit you have to subtract operating expenses. As I said earlier, operating expenses can be expenditure on power, fuel, administration, advertisement, selling expenses, depreciation, so on and so forth. However, operating profit does not include expenses from interest in case of any loans taken or taxes which are payable to the government. That is why this operating profit is also known as EBIT in short form, that is earnings before interest and tax. Finally, we come to net profit, and this is what most of the investors should be interested in. Net profit is operating profit from which you remove the taxes payable to the government or interests in case any loans have been taken. And this net profit is also known as the bottom line of the company. Net profit is the total amount earned after paying all the expenses. Friends, that is what I said. This is the figure in which we are most interested in as an investor. Friends, for a practical comprehension of profit and loss account, please browse through available websites, observe various good companies' financial accounts, and study the balance sheet, figures of profit and loss account. Particularly, you may note sales figure, expenditure figures, interest outflow, taxes paid, depreciation allowed, net profit obtained over a period of few years in succession. Compare them between different companies and make a clear understanding and perspective in your mind. Friends, in the next few episodes, we shall discuss about the various financial ratios of a company, such as earning per share, known as EPS, price earning ratio, popularly called PE ratio, book value of a share, price to book value ratio, dividend yield, interest cover, and there are many other important ratios which we can study in a financial report of a company. Friends, if you have found this discussion knowledgeable, please do subscribe to this channel if you have not done so as yet, which will ensure timely receipt of all my episodes on your screen. Please do not hesitate to post your queries in the feedback comments. The space is provided for such comments, and I shall indeed reply to all of them. Friends, see you again soon and have a nice day.